to today's Morning Report Charts Prices on Tuesday, the 17th of October, with me, Richard Perry, market analyst at Hantec Markets. We've got an improvement in the dollar prospects, actually. The dollar has picked up in the last sort of day or so, coming on the back of suggestions that there's a new name that's sort of coming to the fore in this run for FOMC chair, and that is John Taylor, who is seen to be sort of more hawkish than Janet Yellen and also Jerome Powell. So subsequently, we are seeing the dollar strengthening. Look at the Treasury yields. This is interesting. 10-year jumping back a little bit, but look at the 2-year. 2-year rising to this highest since 2008. Let me show you. Bang, 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 bang. Since 2008. That is a really incredible move on the 2-year. So subsequently, what we are seeing is dollar strength, and also this is a chart that again I'm going to start looking at. I'd sort of just discounted it for a little bit, but I still think it's in play. The Bund spread over the 10-year Treasury, or under the 10-year Treasury, I should say, is widening again, and that's come as the Bund yield has dropped in the last sort of week or so, and that Bund yield is at multi-week lows again. I think 5-week lows on the Bund yield. So subsequently, with the US 10-year yield sort of jumping back, that's subsequently dragging on euro dollar lower. So watch out for that, and you can see that in this chart here, or the table here. Euro dollar 17.70. Pound sterling is strong against the dollar today, and we've got inflation for the UK, and we've just had the inflation readings coming out, and we've seen inflation coming in basically in line with expectation. Core CPI at 2.7, headline CPI at 3.0, and the PPI input prices at 8.4. So basically sort of broadly in line with expectations, but helped to sustain sterling, which has been positive early doors today, and just helping to sort of outperform the dollar, that inflation data. The yen is also a very, very mild outperformer, and that's coming on geopolitical concerns as North Korea suggests that nuclear war could be happening at any time. So that has sort of led to a little bit of safety trading there into the yen. But it's interesting to see that gold is not seeing a similar demand today. Gold down just 0.3%, but back below 1290, which is a key level I'll talk about in my chart analysis in a bit. Equity markets also mildly negative. FTSE, very slight underperformer, I suppose you'd argue, with that sterling strength today. So, what about the rest of the day in terms of market data? You've got the German ZEW sentiment at 10 o'clock, and then Eurozone final CPI at 11. So the ZEW is expected to again be strong. 20 on the German ZEW. That would be picking up from 17. Eurozone inflation is basically going to be is expected to be confirmed at the flash readings of 1.5 and 1.1. 1.1 on the core, 1.5 on the headline. Then we're looking at US industrial production in the afternoon. 0.3% gain on the month, although last month we saw a 0.9% drop. Capacity utilization improving slightly to 76.2. So yeah, some more data to watch out for today. But my chart of the day is the euro yen. Now, we've seen the euro declining and the yen just holding up a little bit in the last sort of day or so. And what we have seen is just the euro yen, which is dropping back towards 31.70. 131.70 has been it was an old breakout, has become supportive in the last few weeks. Now that level of support is coming under increasing pressure. It's been tested several occasions, again tested yesterday, held on, but it was dropping back towards that level today. Look at the RSI, 48. That is coming back to levels not seen since early September. That was before the market was sort of holding on to this breakdown. Sorry, this breakout, I should say. MACD lines dropping away, stochastics dropping away. So the pressure is growing on the momentum side. We can see this resistance at 32, 35 area in the last sort of day or so. That's a bit of a pivot as well. you could argue. But we are seeing a more negative configuration on the hourly momentum. RSI failing at 60, MACD lines failing at neutral. So this is all sort of turning more into a corrective outlook of a chart, and pressure coming back likely to be on 3165, and a breakdown. You could even call that a little small top pattern, so you'd measure 3350 down to 3170. That's what, 180 pips, and that would be around about 130 big figure again. So the support sort of on this below the neckline of that breakdown comes in at 130.60 and then not back until 129.35. So 130 big figure could easily be seen, but certainly the momentum indicators are suggesting that this is losing steam, coming back towards this sort of low 40s area on the RSI, but below 50 is a multi-week low on the RSI already, and the MACD line is also falling away. So this is increasingly turning corrective, and certainly a move below 3170 would put the pressure on then to the downside. So I wish you good luck in your trading, and I'll speak to you later. Thank you.